Hemang the Senior Vice President of Sharekhan, joins us in the studio to answer our questions and, of course, recommend stocks for us. But before we talk about those stocks, I want to bring up BHEL. This is a stock that Hemang had recommended some time ago. We talked about it. While we talked about it, it was trading at 1,952. And I remember you'd given it a target of 2,596. Now, that stock since then split. A 1:5 split. It's currently trading at 330. Now, if we were to multiply that by 5 to find out what its value would have been without the split, it would translate to about 1,650. So it has dropped from where you recommended it. So when you're looking at BHEL right now, it's underperformed from what we expected. Would you still say it's a buy, or for those of our viewers who bought it based on the recommendation, would you say continue to hold it?
Yes, we do think that the stock has underperformed because it has a major exposure to power sector, about 80 to 85%, and where there are fears of slowdown because of the state of bad financial health of the SEBs, and the investment cycle has slowed down. But we think that this was just a temporary phase. Overall, order book wise, we think that BHEL is doing extremely well. And now there are reports that the government is considering imposing import duty on the Chinese equipments, which would be a big relief for companies like BHEL and few other companies in the capital goods space.
Coming to the picks that he's brought to us this week, the first of the two is Sun Pharma. This is a growth pick. Take a look at this package on Sun Pharma. This is an introduction to the company, and then we'll talk about why Hemang thinks we should buy this stock right now.
An international pharma company, Sun Pharmaceuticals, develops drugs for diabetes, cardiology, neurology and gastroenterology, among other ailments. The company has a large presence in the US markets via its Detroit-based subsidiary, Caraco Pharmaceuticals. In 2010, Sun Pharma completed its acquisition of Israeli pharma company Taro, which will open up many more geographies for the company to explore. Also, a minimal product overlap with Taro will help Sun Pharmaceuticals' product line to enter new categories. But the company has faced various regulatory investigations over the past few years. Patent infringement laws and issues with the US FDA regarding Caraco's manufacturing standards could hurt the company's profit, which has seen a 20% growth in the last 5 years.
Alright, so that was Sun Pharma. Hemang, I want to ask you, first of all, pharma is a tough business for a retail investor to understand, and we know it's a bit of a defensive sector also. So could you tell us why you recommend Sun Pharma at this point, especially in a market like this?
Why we like Sun Pharma is because we think that it is a combination of a defensive play as well as growth. Expectations are very high, and there's a visibility of growth with a high margin. So we think that from that perspective, it's looking very attractive.
But when you talk about growth, and we know that we've had a lot of good news come out about this company. There is the Taro deal that they're looking at. We know that the company has seen a 25% re-rating in the last 18 months or so, which means that all of the good news has already been priced into that stock. So the price becomes then really expensive at this point. So my question to you is, how much of an appreciation do you expect to see from here, considering that all of this news has already been priced in? And secondly, do you think that it might be a little expensive at this point to pick up?
Yes, it is definitely a little expensive at about 20-21 times FY13 earnings. But what we like about this company is that it is a very well balanced and diversified business model. For the domestic market, they have a very strong growth plan in place with a focus on the chronic life segment and much superior field force. For the US market, which is again a very big market for the ANDA and overseas opportunities, they have a company called Caraco, which is doing extremely well. And recently, post the Taro acquisition and taking the full control over that company, for the rest of the markets, they also have exciting pipeline in place.
And how far do you expect this stock to appreciate if we were to get in at this point? What sort of targets do you have on this stock right now?
We are looking at the appreciation of about 20% on a compounded basis over the next 3 to 5 years.
That was Hemang's first pick. That was Sun Pharma. His second pick is Ceylon Exploration. Take a look at this company and the introduction.
Ceylon Exploration is an oil exploration and production company incorporated in 1985. When the government opened up the oil exploration sector for private initiative, Ceylon was among the first companies to get the rights to develop oil fields in Gujarat. The company has commercialized 2 new wells in its Lohar oil fields, which is expected to boost its annual production by about 50,000 barrels. Also, there are plans to drill 15 to 20 new wells over the next 2 years, and the management expects to ramp up production to 5 lakh barrels by FY13. Ceylan has reported robust revenue growth and stable operating margins in FY11. But the company's performance is dependent on crude prices, which have seen enormous fluctuations since May this year. That, coupled with the weakening rupee, could hurt Ceylan's profitability.
Alright, so that was Ceylan Exploration. Even this is not a company that's very heavily tracked by the media. There aren't too many analysts, in fact, that are following this company. How do I find out whether or not I should continue to hold this stock? How do I track this stock? How do I find my research?
Through the quarterly numbers and the annual reports, one can get some update on what's really happening in the company. So yes, I mean, one should not take too much of an exposure in this kind of companies, but people who are looking for substantial upside and where the stock is not widely covered, that is where you will get an opportunity to buy something at an attractive entry point.
But tell us, why does it make the cut for you?
There is going to be a very strong production-led growth over the next 2 to 3 years, from about 2 lakh barrels to almost 4.8 to 5 lakh barrels, and this company has a very high operating profit margins of about 47%, has enough cash to carry out its operations, and we think that the discount in the valuation at which it is available compared to a company like ONGC or Kane or any other company is substantial at about 50 to 70%.
We're going to answer a couple of questions that came in from you during the week. Now, Ashish has written in. He tells us he's holding GMR Infra at 26 and IVRCL Infra at 38, and he wants to know what sort of returns he can expect from these stocks in the long term. Even 2 infrastructure stocks, what sort of returns do you expect from these stocks in the long term?
We think that the entire sector is beaten down too much in the last 1 year because of the high interest rates and the slowdown in the capex cycle. Some of these stocks, particularly GMR and GVK that he's mentioned, are looking attractive at this point of time for a long-term investor. We think that once there is a revival in the investment cycle and people feel more confident and the interest rates also peak out, which people are widely expecting over the next about 3 to 4 months, these stocks can give an appreciation of about 30 to 50% over the next 1 year. That's the feeling that we have.
All right, we have time for one last question, and this one comes in from Ajay Singh. He has Oriental Bank of Commerce at an average price of 360 and Federal Bank, which he bought at 90 rupees. Now, he wants to know, should he buy more shares of these companies? Well, let me take a look at where these stocks are trading right now. Oriental Bank of Commerce closed the week at 370 and Federal Bank closed the week at 417, much higher than where you bought them from. So, Hemang, would you recommend he buys more of these stocks, or would you recommend he goes into maybe private sector right now because he already has PSU stock?
We have an extremely positive outlook for Federal Bank, and even the numbers, in the last 1 or 2 quarters that they have come out with have been pretty impressive, and the valuations are looking attractive. So there he can add more if he has surplus money. But I feel that since he has exposure to both Federal Bank and OBC, it would make more sense to go in for one of the private sector banks, whether it is Yes Bank or any other good quality private sector bank.
If you're going to put in more money into the banking sector, consider Yes Bank. That's the last of our recommendations on this show. Thanks for tuning in to All About Stocks. Hemang, thank you so much for joining us on this show as well.